Thank you for joining me today. I'm just going to be running through a bit of a corporate update and a bit on the Jasper Hills scoping study, which we released earlier this week. Cautionary statement there. It's been a very busy year for us, not only with the acquisition of Jasper Hills, but also with a few other major transformational transactions that we've completed throughout the year. The major one for that was Lord Byron Mining, which we acquired in November. It's about 100 kilometres to the northeast of Second Fortune, and we've released a scoping study earlier this week that demonstrated a really high cash flow generating project in excess of 88 million free cash flow at a gold price of 3,000 an ounce. So very pleased with the outcome of that study and a significant inventory of ounces up there. That's really put us onto the path now of trying to get to that 100,000 ounce run rate. That's been our goal and still is our ambition to be a 100,000 ounce producer in the region. And it's as simple as combining the projects that we do have now, Second Fortune, Jasper Hills, which combines both Fish Underground and the Lord Byron open pit, to getting to 60,000 ounce run rate by the end of 2024. 2020 from each project, and it really is as simple as that. Earlier this year, we completed a debt restructure with St. Barbara, which has resulted in the company becoming debt-free, which is a major deal for us. And St. Barbara been a very strong supporter from us for over the last 3 years, and they're continuing their support in a placement in an offer that we have upcoming later this week, which I'll touch on at the end of the presentation. Over at Second Fortune, we've just started the transition to owner-operator, and that's really to try and target some cost savings of about 250,000 per month, which is $150 per ounce. Bringing on the Blue Cap mining team into Linden Gold has been a great outcome for us as well, and they're assisting with the Jasper Hills project, of course, and bringing their in-house capabilities with equipment and experience and personnel across the Second Fortune as well. As most of you know, we're strategically located in the South Laverton region there. There's a number of multi-million ounce deposits in and around us. We're very excited to be in that postcode. The Jasper Hills project, you can see off to the northeast of Second Fortune there, that's strategically located, and it forms a major part of our strategy and our pathway to growing to be a mid-sized gold producer, and reliably a long-term producer as well. There's a significant interest happening over there in the west in the Leonora region, and of recent there's actually been quite a lot of interest in the South Laverton region where we reside as well. Our long-term goal is to become that 100,000 ounce producer in the South Laverton region. The combined projects, you can see that they're really the stepping stones and the building blocks to getting towards that 60,000 ounce run rate, and then targeting up to that 100,000 ounce run rate. Second Fortune's been operating for 3 years now, just under 3 years. Forms a base load of a high grade underground mine, and it's got us to a point where it's positively cash flow generating now, and we're aiming to complete a bit more drilling in December and January to extend that mine life out at least another couple of years over at Second Fortune. Over at the Jasper Hills, the Fish Underground, that's a low capex, high grade startup, and it stands on its own feet well. It generates pre-tax free cash flow of nearly 24 million. We're really scratching the surface at Fish Underground. There's a lot more to be found there, and we're setting that mine up as a stage 1 to follow into stage 2, which will be a much larger underground, and stage 2 is really where the Lord Byron open pit comes into play as well. Onto the scoping study that we released earlier this week. Excellent outcome for us. It generates over 100,000 ounces in the 31-month time frame. 88 million of free cash flow at a spot price of 3,000 an ounce, and all-in sustaining costs of less than 2,000. So it's really demonstrating a robust high cash flow project. Importantly, it's a low capex requirement as well, which given the current markets is extremely important. And we're looking to try and get the Jasper Hills project started around mid next year, around that June time frame. the Fish Underground. It's a low capex startup. You can see the schedule off to your right there, aiming for about 20,000 tonnes per month, which generates about 2,800 ounces per month just from the underground. It's high grades, running about 4.4 grams a tonne. It's simple mining methods, simple mine design. The ore bodies are 4 meters in width, which is, it's not as narrow vein as Second Fortune. That also makes it a lot easier for us in terms of mining, being able to use bigger equipment and be able to develop and produce a lot quicker than what we could do over at Second Fortune. So there's about 26,500 ounces to come out of that in stage 1 of the underground. But that really is, as I was saying before, scratching the surface of fish, because there's another big block that sits right underneath the current mine design that you see there. And we expect to try and bring that into the feasibility study over the course of the next 3 to 4 months. Over at the Lord Byron pit, it's a larger base load. It averages about 1.7 grams, 244,000 ounces in resource there. The mining plan, or the stage 1 plan that we've put into place, is about 83,000 ounces produced from this pit. It'll be a stage mine, and we've done that so that we can reduce the upfront capex. You can see that in the first 12 months, there's a high grade component coming through. And that really allows us not to go and do a large waste cutback to begin with, and really maximise the cash generation in the first 12 months, leading into a larger open pit that runs out for 31 months. The pit design that we've looked at for the scoping study is simple truck and shovel type pit design. You can see that of the resource that's there, again, we are just scratching the surface here. There's likely going to be an underground component to this, which we're going to start the review work for coming up the next few months. You can see the high grade blocks at the bottom of that pit design, the yellows and the reds. And that's really where we're targeting, not only for an underground design, but also to infill with some more drilling to increase the size of the resource and potentially the size of the pit as well. We'll say that pit optimisation was run at 2,500 gold price. So we're expecting that run at a higher gold price of 2,750, which is still conservative, that we'll be able to bring in a lot more ounces into play. We've been out at Second Fortune now for nearly 3 years. Started production in April of 2021, and we've sold just under 400,000 tonnes to the Gwalia mill, which is mostly to St Barbara under its ownership, but more recently to Genesis. We've got an excellent relationship with the Genesis team. They're actually processing one of our parcels as we speak, and we're looking to extend our processing arrangement with them into 2024. So we're in discussions with them on that at the moment. We've operated Linden Gold on an ex-gate cost model since inception, and we've adopted that same approach into the scoping study, assuming a midpoint for the haulage and processing costs based on potentially hauling to a number of mills that are in the region. You can see in that white circle there, there's 4 process plants well within range of both Second Fortune and the Jasper Hills projects. So it gives us plenty of flexibility. Overall, when you look at the combined scoping study summary, note that the low capex up front, we're into positive cash flows from month 4 and 5. And that's really a result of bringing the Fish Underground online sooner. And as we bring fish online, that's bringing in high-grade material, and we're starting the smaller waste cutback on the Lord Byron pit. And we start ramping up the Lord Byron after month 14. This is when we start getting into stage 2 of the Lord Byron, and again, the low all-in sustaining costs, given the current inflationary environment, it's been a good result for us with the scoping study. We've used real-time costs from Second Fortune, and with the expertise from the Lord Byron team that have come across to Linden Gold, they've got a very good handle on the open pit side of things as well. So we're we believe we've been quite conservative with the costing that's being used, and we'll be able to achieve this 88 million of free cash flow from the projects. We'll note that 88 million free cash flow is just from the Jasper Hills project. You've got Second Fortune, which will be in production as well and producing its own cash flow in addition to the 88 million. Second Fortune, it's been our base load, a high grade, our mine for the last 3 years. You can see that over this particular year, capital year 23, the cash flows have improved. It's still quite a cost high environment at the moment, particularly with steel and explosives and fuel and that sort of thing. I remember starting Second Fortune in December of 2020 and fuel, diesel was $1.10 a litre, and now it's sitting up around $2. But we've gone through this inflationary period. We're still able to generate a positive cash flow out of Second Fortune, which is important. Coming into Q3 this year, where we saw the gold prices increase, and consequently the cash flow generation out of Second Fortune also increased. So currently going through the owner-operator implementation through there, we're bringing on our own people and equipment, and we're aiming to try and reduce the monthly costs out there by about 250 grand. That implementation will run into early 2024, and then sets up as a base high-grade feed and cash flow generating as we move through 2024. Still a shallow mine comparative to the rest around the region. We're only 300 metres in depth there. As I said earlier, we're looking to complete some drilling, underground diamond drilling in late December and early January, and that'll form, or will give us about another 2 years additional mine life out there at Second Fortune. We want to target a few parallel structures that we believe are there, and also the other side of this southern fault, which will bring additional ounces and additional ounces per vertical metre into the production profile. We've got some good infrastructure already established up there at Second Fortune. It's really sets the base for us in this South Linden region. We won't be able to use this infrastructure for the Jasper Hills project. It's just a little bit too far away. But with what we're doing with the owner-operator implementation at Second Fortune, we can transfer those skills, management and experience over to the fish underground when we get that into production mid next year. So it's not like we're going to be starting afresh when we go to get the fish underground into production. We've already set up our systems and processes and the way to do things, the way to go mining, that's easily transferable across to other operations. Earlier this year, and that was in October, we completed a deal with Legacy Iron Ore, who have a gold mine about 10 kilometres to the south of us. We have some surplus camp capacity that we weren't using. We did a deal with Legacy where they're going to utilise that part of the camp. It's been a great deal for us, particularly for infrastructure that we aren't using. Brings a bit of cash flow into the company and strengthens our balance sheet. On the exploration side of things, we have plenty of good results from shallow, high-grade intercepts in and around our projects. Main takeaway from this is that they're all on granted mining leases. We haven't got that 12 or 18-month window to get these things to production. We're looking to try and follow this up in 2024, early 2024, and really expand out. What we're expecting to see is a number of smaller, high-grade open pits in and around Second Fortune. And now with the blue cap experience and capability that's coming to Linden Gold from picking up the Lord Byron assets, these are pits that we can get into quickly and generate a cash flow from quickly as well. So that drilling will start in late December and rolling into January. Follow up on some of these targets. Over the Jasper Hills exploration side of things, you can see there on the fish underground, that was that block I was talking about earlier, where we've got the stage 1 underground mine design, where you can see the mine design there. And then stage 2 of the fish underground is really to expand that by about twice the size that it currently is. Fish underground is a 13-month project on paper at the moment, and we expect that that'll grow out to at least 2.5 years once we complete additional drilling into this block that sits underneath it. We're pretty excited about that. It's a block that already has drilling in it. It's actually got quite a lot of drilling in it, and the drilling that we complete is really to try and get that model to a point that we have the confidence to include it into the feasibility study and go mining there in 2024. At Lord Byron, you can see that the resource is quite well drilled out here. There's a number of high-grade sections at depth, which is not uncommon for WA mines to see a bit of high grade as you get deeper. There's also a gap in the model there, and that forms a large part of our drill targeting coming into 2024. We are going to start some of this drilling in December next month, and we'll be trying to follow up on that gap that you see there, but also at depth as well. There's a project called Gilt Key, which sits just to the south of the Lord Byron open pit. That's got some shallow, high-grade intercepts, and we'll be looking to follow those up as well. That sort of fits into the realm of another smaller, high-grade open pit that we can bring online very quickly. That's really the bulk of the presentation. I'll just quickly touch on the board of directors. Colin, myself, and Min Yang are still on the board and have been for the last 12 months. Ashley Fraser's come across from the Lord Byron side as part of that acquisition. He's got over 30 years' experience in heavy industries equipment and a number of executive positions that he's held across Australia. So very pleased to have Ashley and his team and experience on board with us. And he's helping us get the Jasper Hills project into production and helping us grow the company through that South Laverton region. So that's it for the presentation. Is there any questions from anyone?
Thanks, Andrew, for providing such a great presentation. Look, there has been one question that's come through, and just a reminder, if anyone would like to ask a question, just use the Q&A box in the Zoom app. So question that's come through is, what is the Lord Byron truck cycle time?
What is the Lord Byron truck cycle time? It's a good question. I'll have to go back and check that through the scoping study. I don't have that data right in front of me, unfortunately. It's not a big pit in that stage one because it is a shallower, high-grade pit that we're targeting. And then before we move into stage two, it's not a deep pit. We're talking between 50 to 100 metres in sections. So the cycle time would be quite small.
Okay, thank you. Second question that's come through. Can you please elaborate on the exploration potential at Second Fortune and near-term production opportunity?
Sure. So really where we see the value add at Second Fortune is probably from the underground straight up. There, as most would be aware, Second Fortune for us has been mining the main lode and the what we call the Katura lode for the last 3 years, but we're confident that there is a number of let me just find a page to speak to. We're confident that there's a number of parallel structures that sit either to the east or the west there. So in terms of adding ounces and for a low capex number, you're going to find them at Second Fortune underground. That's really the main target for us to begin with. When you start talking regionally, and what we're trying to do here at Second Fortune is really get the ounces per vertical metre up from by the addition of these parallel lodes. With the decline in place already, that's the best value add, the lowest amount of money. When you start looking around at more regionally at Second Fortune, we've done some of this drilling earlier this year, and these results have been fantastic. And we have followed up on one particular project that you don't see in these results, and the only reason you don't see it in here is because it sits on an exploration lease. It's called Great Carbine. It sits in about the middle of our tenement package there, and we have had some excellent results from that. The problem with it being on an exploration lease is it's a 18-month timeline to converting it to a mining lease. So we are looking to target more of these prospects and projects that sit in and around Second Fortune that could be brought quickly into production, given that they're on granted mining leases already. If you have a look at some of the other companies in the region, you know, they're doing 6,000 ounces from a pit and 5,000 ounces from the pit and toll processing that. We've already got those contracts in place in terms of toll processing or purchase agreements. So our ability to monetize these, we can do that very quickly. So that's a big part of our focus, and makes it a little bit easier now that we've got the Lord Byron team in place and their capabilities and experience to bringing some of these projects from resource through to open pit production.
Excellent, thank you for that. What is the potential for the fish underground to continue below the current mine plan?
Yeah, strong. You can see the mine plan here. That's the 13-month mine plan that generates 26,000 ounces. You could double that for what we think is down there below the current mine design. And when you compare it to, say, Second Fortune, we've been there for Second Fortune for 3 years, just on over 40,000 ounces. We're talking about doing 26,000 ounces in 13 months, and then potentially more again in another 12 months. So there's a lot of potential here. Also along strike, there's a project called Fish South, which we haven't really elaborated on in this presentation. But we see huge opportunity here in this phase 2. And the only reason we haven't included it in the scoping study is we just need a little bit more drilling, which we're planning to do in December, and expecting that will come into the feasibility study. And more than likely, when we do actually go to start the Fish Underground in the middle of next year, the plan will be to mine out this block 2 or this phase 2 straight away. So it won't be a pause; it'll be a straight let's go into phase 2.
So you've used a sort of a base case figure of 2,750 for Aussie gold price. If the gold price is higher, how does that impact your mining and also your exploration?
Yeah, so we've used 2,750 and 3,000 an ounce. We've used a conservative case for that 2,750. We're confident that, look, our opinion is it's not going to get that low. You see a number of the banks are forecasting well over 3,000. In fact, I read a report yesterday that said 3,050 is the new base Aussie gold price. So that really accelerates our exploration and our production requirement. So getting fish into production and Second Fortune, having those 2 projects generating strong cash flow, and even stronger than what you've seen here in this presentation, puts us in a position to put more dollars into the ground, expanding those resources and getting more pits into production. But also it allows us the cash flow to look at other M&A opportunities in the area as well. As we know, it's a fantastic area. We are still one of the only junior gold producers in the region, and that puts us at an advantage. There's a lot of explorers through here. There's a lot of lower market cap companies as well. And being in production and looking to get Jasper Hills into production puts us in that really strong position to go and do something M&A wise. Having that cash flow coming out of the mines is important for that.
Just a follow-up question about the Fish Underground. Do you drill it out at depth once in production, or would you drill it out prior to being in production?
Yeah, so it's had some drilling. Can you see my cursor? Can't see my cursor? Yeah.
Yeah.
So it's had some, this block down here has had some drilling. It's not a major issue, but its proximity to the pit edge makes it difficult to drill from surface at depth. So part of the plan is to put a small drill platform off this development as we're starting, and putting a lot of holes into this region through here and also along strike. So we'll be doing a combination of both not exploration, but resource definition and resource addition later this year, and as we go to get the project into production as well.
And over the next 3 to 6 months, what's the news flow looking like, and what announcements will you release to shareholders?
Yeah, so we've got it'll be quite a busy 6 months. Obviously, with the owner-operator implementation at Second Fortune, we're looking to release some good results from Q1 in next year, aiming to have reduced those costs and increased cash flow out of the mine. We're also looking to secure processing agreements that roll out to 2025 at least, and that's for both Second Fortune and the Jasper Hills project. We're looking for that liquidity type event, whether that's an IPO, which we're still putting some work into, of course, or whether that's an M&A type opportunity, that we're looking very closely at that as well. And of course, we're getting Lord Byron and the Fish Underground into production. And on top of all that, exploration results from both projects, Second Fortune and Jasper Hills. So it's going to be a very busy time for us. We're quite happy that we've been able to bring some of the Lord Byron guys across to our executive team and give us a hand with this work, because it is going to be very busy and there's going to be a lot of news flow, and we're expecting it to be good news flow as well. So looking forward to being able to update shareholders and the market alike.
Yeah, Thanks, Andrew. And in an environment of a strong Aussie gold price, it's certainly helpful. So, look, there's no more questions. Hang on, these I've got one question here. Could you please address the Devon JV exit?
Sure. Look, it was disappointing not to have seen Devon through to production with Matsa. It was part of our strategy centered on development and producing and production assets in the region. As you know, we're trying to grow to that 60 and 100,000 ounce producer, so that formed a big part of that strategy. However, it wasn't to be. And when we look back now at the capital requirements for Devon to get that into production, they're very similar to what's required capital-wise for Jasper Hills, which generates significantly higher cash flows, and we own 100% of it. It really came down to prioritisation of capital, and we decided to allocate that towards Jasper Hills instead. So we have signed a commercial agreement, an MBIO with Matsa, and looking to unwind that joint venture, and now we'll put our focus onto Jasper Hills instead.